Okay, folks, so we've got a big week coming up this week, and you could say, Charlie, you say that every damn week. Well, let me ask you this question. Have I been wrong? Every single week has been huge. We've got lots to get ready for this week. We're going to start with catalysts, and then we're going to move on to earnings. And then we're going to finish off the video with big trading opportunities that you're going to need to know about. My thoughts on setups like BBIG, as well as Sega, which ran parabolic into the after hours. Let's get to work. So not only is this going to be a massive, massive week, but it's also going to be a history-making week. We are right now in a period that is going to be reflected on for years and years and decades ahead, similar to how now we reflect on the dot-com bust or the 1970s inflationary period. On Friday, we were talking about how the current losing streak is the fourth longest consecutive down week since 1928 at 7 weeks. And this week either breaks that trend or we end up heading even closer to number one and perhaps a new record down. If we have another down week in the S&P 500, we're going to be tied for number one in terms of most consecutive down weeks in history since 1928. If we go on another 2 weeks, we're going to have the number one position. We've never had 9 weeks in a row. If history is any guide, this week will either be a contrarian rally or we'll be rewriting history with a new record. Quite a nail-biting week to head into regardless. Let's talk about catalysts to know. So Monday, you have Fed President Bostic from Atlanta participating in a conversation on the economic outlook. Last we heard from him was a couple weeks ago, and he said he wasn't expecting a 75 basis point hike, and he was also expecting inflation to cool down. The reason that you need to pay attention to what he says is because the Fed has a habit of massaging market expectations so that the market understands where the Fed is moving and you don't get huge volatility swings. And so businesses and people that interact in the economy are also not just rug pulled at the last minute, or at least less rug pulled. If the Fed is getting more hawkish and they want markets to know, you'll start seeing Fed members come out and start suggesting more hawkish things, a little bit more hawkish in terms of rhetoric. When markets bounced huge after that March meeting, all of a sudden they started tanking dramatically once they'd already recovered a lot of the way to all-time highs. And why was that? Well, it's because the Fed started coming out and saying things like, oh, we're actually thinking about raising rates a little bit faster. Oh, it looks like inflation's going to be a little stubborn salamander. The Fed has the soft power of being able to tighten financial markets without actually doing anything. Just talking, little talkies. On Monday, you also have JP Morgan Chase holding an investor day where it is expected they'll explain why their tech and other investments make sense. JP Morgan is one of the biggest investors in tech. They also said a few days ago that they're bullish on some major Chinese tech stocks. Obviously, this has drawn a lot of criticism because a lot of the big dogs on Wall Street and elsewhere have said, hey, wait a second, this is a very, very bad condition. We were buying like crazy last year at much higher valuations, but this year we don't recommend buying at lower valuations. This is going to be an opportunity for JP Morgan Chase to describe why they're buying in certain sectors and make the case for why it's going to be a net positive investment in terms of ROI. Right now, when a lot of people are unanimously negative, you're seeing JP Morgan Chase buy, and you're also seeing Berkshire Hathaway, Warren Buffett's Berkshire Hathaway buy. So when you start seeing these guys talk and explain why, that's going to be something that people watch. On Tuesday, NVDA and AMD will be giving a keynote presentation, or at least a conversation at a keynote presentation, where they are expected to explain the situation that their companies are currently facing and where demand is likely to be in the upcoming quarters and years. Both companies had an insane 2021, and now both are down huge from highs. AMD down 40%, NVDA down about 50%. Wednesday, though, is the big dog in terms of catalysts. On Wednesday, the FOMC meeting minutes from the last meeting will be released. With high inflation, the question that people are increasingly asking, at least while they can still afford to ask questions, is whether or not the Fed is going to accept the possibility that they may need to raise rates above neutrality. A neutral rate is one where it neither boosts or hinders the economy. If inflation is at the Fed's benchmark, then that could be a rate of about 2.4%. However, given how high inflation is right now, the neutral rate could be as high as 5 or even 6%. Obviously, at the end of the 1970s and into the 80s, Volcker had to raise rates a lot higher than the inflation at that time in order to even bring inflation down meaningfully. So even going above a neutral rate would be considered very, very dovish as compared to what we did back then. So are the FOMC meeting members acknowledging the possibility that that could happen? There's also the question that I don't think is going to be addressed as much as we'd like it to, but that's that question of, well, the economy is slowing, financial markets are tightening already a decent amount. Well, it's pretty clear that we're already heading into a contractionary economy if we're not already deep in one. Does the Fed acknowledge that? If they start acknowledging that, that could mark the beginning of a trend where people are anticipating, okay, well, they start acknowledging it this meeting, the next meeting they acknowledge it a little bit more, the next meeting, and then all of a sudden they start reacting to it in terms of being a little bit more careful in terms of raising rates. Some people are arguing that the Fed was way too late at raising rates, and now when we're raising rates into an environment where things are getting bad, it's sort of like kicking a horse while it's down. Moving on, nothing super duper exciting in the broader market on Thursday or Friday. Let's move on to earnings. Monday before open, you have XPeng, ticker XPEV. As someone who does like the EV sector and does think China's EV market is going to continue to be one of the hottest, I'm definitely not too happy with these draconian lockdowns over there. I'm very, very squeamish about what's going to be coming out from companies like XPEV, NIO, and of course Li. The reason is very, very simple. You have two huge shocks right now. Number one, you have the shock in terms of locking down major cities where people have money and can spend. And also number two, locking down in some cases major factories and facilities that actually build these vehicles. So I'm expecting some pretty damn disappointing numbers from this previous quarter. However, it is expected that through June, a lot of these Chinese cities are going to be reopening and getting back to business. So guidance is also something you want to look at. Is guidance really adjusting upward? Zoom is reporting on Monday. It's down something like 84% from highs. I'm not the biggest fan of Zoom, but I think that you're at the situation where expectations are so damn low and it's been so easy for short sellers to short the heck out of this that I would not be surprised if it becomes a temporary short squeeze candidate. I'd argue it's probably very likely that it becomes a temporary short squeeze candidate. Best Buy, AutoZone, Abercrombie and Fitch, and Dole on Tuesday before open, Nordstrom, Intuit, Urban Outfitters, and Arco after close. The options chain indicates a big move in the Best of Buy. My expectation is that Best Buy has seen lower demand and also crunched profit margins, probably worse than Target. Best Buy sells, of course, hardware and expensive tech mostly. All that kind of stuff I would expect to have some big headwinds in an environment where you have less stimulus checks and it's hard to actually get the supply to sell and people are having less and less demand for those things in the first place. Nordstrom, probably similar to Target type of situation, although here again, higher end stuff seems to be getting hit harder, so Nordstrom probably going to be worse off. We'll see. Wednesday, Sporting Goods, Express, both before open, and then after close you have Nvidia, Snowflake, Splunk, Box. Snowflake, a great software company that just has been completely decimated, down something like 65%. They were trading pretty frothy last year, but 65% down, oof. The crazy thing is I bet their business numbers aren't even that bad. I think they're probably good. The problem is that they just got multiple crunched. Thursday, Alibaba, Macy's, Dollar Tree, Dollar General, Baidu, Costco, Ulta, Dell, Gap, a lot of big retailers. The American ones are going to be watched very, very closely to see if they mirror Target's issues of lowering demand and lower profit margins. The Chinese ones are going to be watched to see how they were impacted during the COVID lockdowns, whether or not people ordered more stuff online with companies like Alibaba or not when they were locked down, and of course, what is the situation moving forward? In China, you're seeing some slowdown in terms of overall growth. Is that resulting in slowdowns in terms of the bottom line in some of these Chinese companies? I think yes. And then Friday, you have Big Lots and nothing really else that I care about. But anyways, big week for earnings. Moving on, trading catalysts and opportunities for this week. BBIG announced they are reporting earnings on Monday, May 23rd, and Cryptide should be fully distributed on or about May 27th, with it expected to trade fully on May 31st. My expectation is that you get a nice hype inflow the first or second day of trading, and then you get a big dump as people take profits. That said, in terms of BBIG stock, I believe if there's going to be a week where you get some fun, it'll be this week. Options chains suggest a move up or down of 83 cents. I think that's probably understating it. I think you're going to get a move much more than 83 cents here. And when you do, you're going to get markets freaking out. You're going to see an acceleration of that move, especially when you go over to the short seller situation and you see how expensive the cost to borrow is here. Now, I'm not a big fan of the holding and hoping methodology when it comes down to stocks that run based on basically just squeezes and catalysts. You want to have a clear entry and exit plan. You want to only be holding it when it's showing proof of concept. I encourage you to have your own opinion, but that is just my thought process on this type of thing. Next, the monkeypox trade. Yes, the monkeypox trade. You have seen media article after media article talking about this unusual but emergent infectious disease that's similar to smallpox. Interesting timing that monkeypox just happened to come out around the same exact time that the apes score a big victory against short seller Melvin Capital. Coinky dink, I don't know, you be the judge. If Earth becomes the planet of the apepox, don't say I didn't warn you. But in all seriousness, I'm no virologist, and I tend to think most case outbreaks with all these different diseases that you hear about just end up kind of going away. But I do follow the news and see what is reacting to the news to judge what is worth paying attention to. And towards last week, yes, you saw some monkeypox trades balloon. We briefed on ticker SIGA in ZipTrader U on Thursday morning in the pre-market, and it ended up running to $15.49. Now, the reason that we briefed on it was because they received approval from the FDA for an IV formulation of their drug. And a bit of research shows that the smallpox vaccine has been used to prevent monkeypox infections with a success rate of about 85%. So this FDA approval coming at the same time where you get monkeypox and the monkeypox story trending all over the place made it, in my view, very, very likely that you get a runner. It was up like 43% on Friday and then 23% more in the after hours. Now, over the weekend, the media has continued to report on this heavily, and President Biden just came out and said today, actually, that everybody should be concerned about this. It also came out that last week the US bought millions of monkeypox vaccines as well, so clearly this is a story. One thing that I have a lot of faith in is the media to spin anything that looks scary as much as possible. And because I have so much faith in that, I would argue that you're going to see continued opportunities in stocks that have products that could potentially help solve this issue if it gets even worse. My thoughts on how to play the trade: I think SIGA is still the biggest runner with an opportunity, but I think it's a little bit more complex than that because it's already run. It'll probably open pre-market upward as it got hyped over the weekend, and then you'll see a cooling down, probably 40 to 60% early in the week, and then you want to watch to see where it finds support and retaining of value. Once it finds support and shows proof that it can retain that support, you want to look for signs of an increase. You want to look for signs that it's going to get another wave. Signs that it's going to get a wave don't include, ooh, I'm going to feel the energy and see if it speaks to me in a way that says it's going to go up. No. Look very specifically for whether or not it's holding an upward direction over our red directional SMA line, and even better, holding or breaking into price strength over our blue price strength SMA line. You want to see first, number one, whether or not it can retain value after it has its inevitable sell-off. And then whether or not it could start going up enough where it's designating a clear take of a continued upward direction or a break of price strength upward. Now, let's be completely clear though, the odds in this market, at least, of a stock going up and staying up are very, very nilch. At most, with a good catalyst story, maybe you get a week or two. So you have to require a lot from your setups, and the minute they go against you, you have to be like, okay, well, does it even make sense to hold it anymore? What was my original exit plan? Okay, lastly, for trading opportunities, SQQQ broke into an upward direction on 421, and it's continued with that upward direction since. My take is you're starting to look a little bit more on the overbought side. And history suggests that contrarian rallies are very, very common, especially when you get, again, into the 7 or 8 week. Because, again, you've already had 7 consecutive weeks. The record is 8. So if you're looking for a contrarian rally, history suggests that you probably get it either this week or next week. So I would say probabilities say that this is looking a little bit more overbought and TQQQ is looking a little bit more oversold. So if you're trading this on an overall trend basis, I would pay attention not just to SQQQ in the next couple of weeks, but also TQQQ. Anyways, that caps off today's video. Make sure to hit that ravishing like button and also subscribe. Let us know what you think about this market this week and what your biggest plays are. If you're looking to learn how to trade rather violently with our step-by-step lessons, private chat, daily morning briefings, as well as our full price target list, I'll put a link to ZipTrader U below. If you're looking to get up to 5 free stocks with Moomoo, I'll also put a link to Moomoo down below. It's an excellent trading app. I think you'll like it a lot. Plus, you might as well get the free stocks, right? These market conditions, you got to get all the freebies you can get. Anyways, that caps off the video, folks. Have a good one, and I'll see you in the next one.